Yo, okay, what's good? We're gonna do a little day in the life video today, and then in the middle, we're gonna go over like the trade that I took this morning because it's currently 7 o'clock, 7 in the morning, 7 a.m. Just took a shower, just got ready, and we're about to take a little trade, and then we're gonna go over how to identify a liquidity sweep, go over the trade that I took today, go over some of my strategy, and then a little bit more day in the life, all right? I will catch you guys whenever I see you guys next. Peace. Alright, so when I wake up every morning, I take these. These are nootropics if you want it. This is it. Alright, it helps me a lot with my trading, helps me to get focused, okay? This is what it looks like, alright? So these are like, these are more for like health, like immunity boost, because it's like spice, peel, and then shilajit. A lot of people know about that. And then this, I had to put it in like a dishwasher thing, but this is like confidence type of thing, motivation. This is sort of like a natural Adderall. So kind of like makes me kind of locked in, makes me smart. This one is similar as well, rewire, total brain, reset. And then, let me see, where's Friday? Okay, and then this one is kind of similar to this. It's just like confidence, good vibes type of thing. And yeah, I'll just stack all these up in the worst drink you've ever tasted. I don't know if you can see this well, but this is how gross this stuff is. All right, it's literally just a muddy cup. All right, so I'm gonna stir this. And it looks terrible, and it tastes even worse. I gag before I even taste a sip of it. I gag just from the smell. So be wary about getting these, but it does help a lot if you want something for like nootropics. Like definitely the only one I would recommend. This and the unreleased, or not the unreleased, the banned Gorilla Mind Rush. I'll probably take 2 pills of that too. Okay, so I'm about to take this to the dome. Let me flip this here. You guys can see it. Ugh. Bro. And then I gotta fill it again because there's some that gets stuck on the sides. Whew. Alright. Okay, now I'm about to take this guy out to go to the bathroom, so yeah. Alright, what's good? So I'm like on my way back from Park City. I just went on a hike, throw up the photos. And I'm about to go to the University of Utah college football game with a couple of my buddies. So that'll be fun. Maybe catch a couple videos in there for you. Maybe snap a couple of vids of the pregame, how it's looking. But yeah, that's the plan for today. No trading. It's a Saturday. Not looking at the charts whatsoever. It's a good day to not trade. All right, yo, what's good? Today is Sunday morning. I'm sorry, I am new to this like vlogging day in the life stuff, so I didn't get a lot of video from yesterday, like whatsoever. You guys saw like sort of like the hike that I went on. I'll throw in like a couple pictures. And then you like saw a 7-second clip from the game. The game was really fun. The University of Utah blew out OSU. What else did I do today? We just walked over. I got some Starbucks. And then, let me think, what else did we do? Just took him out to the bathroom and he's not eating his food for some reason. But yeah, this is like kind of what I'm doing today. I'll probably watch the NFL. Oh, it's so close to me. I'll probably watch the NFL. And all I'm doing is just editing this YouTube video today. So yeah. Yo, what's good? Welcome to the chart portion of the video. Today I'm going to talk about how to find liquidity in the market, and then also how you can use it to your advantage to find an entry. And then next week's video, or honestly next video, hopefully I get another video out within this week, is going to be on how we can find fair value gaps. So if you've been waiting on that, that's perfect. Hopefully I'll get the video out hopefully like middle of this week or at the end, like on Friday-ish. Okay, so today we're going to be talking about how to find liquidity within the market, how to find it on high time frames, and then how we can use it to find an entry day to day, session to session. Okay, and I'll actually go into Forex pairs and different pairs to show that it happens all over the place and not just on the S&P 500 to prove what I'm saying. Okay, so the first thing is, what is liquidity? Okay, so liquidity is liquid cash. All right, so a lot of people think of liquidity as like, oh, well, areas where like banks and institutions can get filled, but that is very true. But liquidity as itself means liquid cash, and why banks and institutions want that is so their orders can get filled. Okay, so liquidity isn't something that banks, hedge funds, and institutions just like get. It's something that they have to induce, sweep liquidity in order for their orders to get filled. Okay, I hope that makes sense. All right, so right now we're going to go over how we can find liquidity on high time frames, like the weekly, the quarter day, and then the daily. All right, so right now we are on the weekly chart. Okay, so we just talked about what liquidity is. Liquidity is liquid cash, right? So in order for banks, institutions, and hedge funds to get their orders to be filled, they need liquidity to be swept, meaning they need to take people out of the market and then also get people into the market. So by taking people out, it liquidates them from their position, giving the banks, institutions, and hedge funds availability to enter within the market. And then they also want to get people going in the other direction of them so they can have even more of their orders filled within the market. And they need all of this to happen because right now, if we were just looking at the hourly chart, let's say this is live market conditions. If a bank was like, oh yeah, I want to make a lot of money shorting the S&P 500. If they placed a short order right here, the contract size that they are using, that these banks and institutions are using, it would just tank the market immediately. So what do they need to do so they can get, first of all, the highest price? So obviously banks, institutions, they're very greedy, okay? They are always looking to get the best price, the best entry for their like short or their long position, okay? So it would be dumb for them to short right here. Wouldn't they want to short up here or up here, right? So by inducing liquidity, they also get a better price point. Also, if they were to enter into a short position right here, their whole order wouldn't get filled. They're using massive contract sizes. If I place a 100K risk on one trade right here and entered into the market, I would get filled and market wouldn't move. But banks are doing $1 million trades, like, you know, $10 million trades, $20 million trades, risking 10 to 20 million per trade. So they are the market movers, right? If they place a 10 to 20 million dollar trade right here, first of all, they wouldn't have nearly enough people going in the other direction of them for that order to get filled. So only part of that order would get filled, and it would drop the market significantly, causing all the other orders that they wanted to place up here to get filled down here, down here, down here, down here, right? And that's not what they want. They want the best price point for their entry. Okay, so that's why they need liquidity, because their orders are so large that only part of it would get filled if they place a short right here, and then it would cause market to fall, and then they would have to start, their orders would then get filled lower and lower and lower. That's why they need liquidity. That's why they push market up, so they get people out of the market so their massive orders can get filled, and then they also need people going the opposite direction of them to fill even more of their orders so that they can get the best price point and the market doesn't just switch in an instant right when they enter into that trade. I hope that makes sense. That's literally what liquidity is. It's people exiting the market. It's people getting in the market in the opposite direction as the market makers. Okay, so with this newfound knowledge, let us go into the weekly chart. Okay, so we still need to figure out where liquidity lies, right? We talked about what liquidity is. Now we have to figure out where it is, right? So where are people exiting the market and where are people getting in the market in the other direction that banks or institutions would want to move? Okay, so everyone knows the basic retail strategies, right? There's support, there's resistance,
There's higher highs, higher lows, lower highs, lower lows. There's breaks of structure. We all know that, right? We've been trading for a while. These are the basic retail trading strategies. Okay, so as a retail trader, if I'm looking at this chart, let's say we bring this back right here, okay? If I'm looking at this chart, I see, okay, look, a high, a low, higher high, boom, break of structure right here, honestly probably within here on the daily time frame, right? We can tell this is a doji, had some consolidation, boom, break of structure, right? So now this high right here is, let's make this black so it's cleaner for you guys. Okay, so this high is our new lower high, right? And a retail trader is probably thinking, oh, if this high gets swept, we're switching market direction, right? We just broke structure, it's going back up. So there are people probably who shorted right here, right, off of the break of structure. Where is their stop loss once this continuation happens? It's probably going to be above the high that formed, right? So we have people with stop losses above there, okay? So when we press play on this, what is market going to want to do, okay? Let's get going. Okay, market's going to want to stop those people out. So boom, the people that shorted right here, let's say they're retail swing traders, the people that shorted right here, they just got stopped out of the market. Liquidity has been swept, okay? What else do the banks want? They want people to enter into the market in the other direction, okay? So with this high getting breached on the weekly time frame, all these retail traders are probably thinking, oh, break of structure, I'm going to enter once this high gets breached, right? Boom, whole bunch of retail traders entering into buys, so they're filling the orders in the opposite direction, and then the people that were just selling just got stopped out, just got liquidated from their position. So there's a lot of free money for the banks to enter into their orders without taking or moving the market significantly, right? So all their orders can get filled at this perfect price point for them. Okay, and then if we play it, we'll see what happens. Obviously, this is hindsight, but I'm just trying to show you guys what really happens with this, right? Boom, we just start tanking. Okay, and this happens on every single time frame. All right, so that happened right here. What happened right here? We had another high, and then we also had 3 equal highs on the daily time frame. I can go in here. I called this out on the Discord, and I was saying this, within this fair value gap, my dog's playing with his bone in his cage. Within this fair value gap, if you don't know what that is, don't worry, another video coming soon. But within this fair value gap, I called it death row because we had liquidity residing above here, and then also a lot of liquidity residing above 3 equal highs right here. What did market do? Boom. Stopped the people out who were shorting right here, right? They had their stop losses right here. Probably had people entering into buys once this high got swept. And then the same thing here. Stop losses, probably people entering into buys when we wicked above it. And then boom, what does market do? Crashes. Okay, so I hope you're starting to see this repeated pattern. Okay, and this is just in a bear market. Same thing happens in a bull market. Okay, we can go over like previous situations where it happened before, where we have a sweep of liquidity to the downside and then a push up, and you'll see this a little bit more within the day-to-day time frames. Right now, we're just in a bear market on the S&P 500. Okay, so now that we know what liquidity is and sort of like where banks and institutions would want to push the market, right? Areas of liquidity. So the most prominent and recent highs and lows within the market is where liquidity is going to lie because there's stop losses there, there's buy stops there, if it's switching direction to the upside, and then if it's going to the downside, liquidity sweep to the downside, there are sell stops there, right? People getting into sell or short positions when liquidity is swept to the downside. Okay? So now that you have an idea of what liquidity is and where banks would like to target, we can use this to our advantage on high time frames to gain a bias on the market. So that's all I use. That is all I use high time frame liquidity for. It's for a bias. I don't take swing trades. I'm a day trader. Most of my trades last from 1 hour to maybe like 3 hours, and sometimes even quicker than 1 hour. The trade will be done. So I do not take trades off of these liquidity sweeps, but I can use them as a bias, saying like, oh, once this high gets swept, once these 3 equal highs get swept, I know we're probably going to switch market direction. It could be a big move for us, maybe leave a couple runners if we're taking shorts in this area, right? Okay, so let's go into how we can find like more liquidity, okay? And we're just gonna work on spotting, okay? So right here, right, we have downtrend, high, break, sweep, break of structure, right? High, lower low. This is the previous low, lower high, boom, lower low, lower high, whatever. Okay, we're pushing down. Okay, we get a break of structure right here to the upside. Okay, whenever I see a break of structure on the daily time frame, I instantly think, where's the liquidity sweep going to be? Because on the weekly time frame, right, we are still bearish. Okay, same thing that happened here. We had a break of structure. So immediately when we had this break of structure on the daily, I was like, okay, where's the next liquidity sweep going to be so we can continue this downtrend on the weekly? And that's what you guys need to think about, okay? So we have a break of structure on the daily time frame, right? This high right here, oops, forgot that I had the magnet on. This high right here gets swept, right? Boom, break of structure. Where does liquidity lie? Right here. Boom. 2 relative equal highs. 2 relative equal highs. The most prominent high, the most prominent and significant high previous to this one, right? We came down, and then this was our lower low on the weekly, our lower high on the weekly time frame. So once we get this break of structure, we can say, all right, it's probably going to target here because what's above here? Swing traders stop losses, and then also we can think swing traders are probably going to enter into buys once these highs get swept. Okay, what does market do? Pushes up, boom, sweeps the liquidity, takes people out of the market, inducts people into the market in the opposite direction, moves market down. Okay. All right, let's look at this again, okay? Break of structure, okay? Where's the most recent and most prominent high? Right here. And then also, we have to keep in consideration these 3 relative equal highs as well, okay? So we know once we get this break of structure, boom, break of structure upwards, where's liquidity? Where's liquidity lying? Above this most recent prominent high. And then also we have 3 equal highs that have not had liquidity swept yet. There's a lot of liquidity lying above here. Let's say people were shorting right here, right? They didn't get taken out by this high, right? We had a break of structure right here, but this high didn't clear these highs, right? Liquidity wasn't swept from above here. So there's still a lot of money to be taken out of the market above here. Oops, okay, whatever. I don't want to do that. All right, but liquidity was swept above here. I just had the magnet thing on. Okay, so liquidity was never swept above here. And it was never swept above here. So what does market want to do? It wants to take out traders from here, also wants to take out traders from here. What does market do? Break of structure, push up, takes out traders here, takes out traders here, continues its direction down. Okay, and this is just on the high time frame, right? Once we get this break of structure, we're looking, okay, where does market want to target to make its next move down? Because we just broke structure to the upside, it's going to be a mini uptrend before a next move down. All right, and how can we use this to our advantage? Okay, so now, if we're looking at current market conditions, we just talked about how we can find liquidity on daily time frames, what liquidity is, how we can find it, and how banks and institutions use it. Okay, so now we're talking high time frame. If we're looking at this right now, even though we are in a bear market, right, liquidity can be swept to both sides of the market, all right? So what do we have here? A weekly low. What did we just do? We just swept that weekly low. There are some moon boys that probably bought within here, retail swing traders that probably bought here thinking, oh, market's going to go up. Or what if they bought here, right? They saw like break of structure or whatever. Boom, they enter right here. Where is their stop loss going to be? Their stop loss is going to be below this low, right? So, market, obviously it's in a downtrend, took these people out. So boom, stop losses have been swept from retail long buyers, right? Long traders, okay? What else happens within here? Retail traders thinking they're smart, thinking, oh, weekly sweep of liquidity, I'll probably buy right here, okay? And if we go on the lower time frame, the people that are buying, let's say they just enter into a long position here, they probably have their stop loss under this low, right? Because they had a sweep of liquidity. They think they're smart little retail traders. They get their sweep of liquidity below this line. They have a break of structure. What do? They enter, stop loss below here. Look at that. See how liquidity is swept on every time frame? We have relative equal highs. What happens? Boom. Stopped all these guys out too. All right, and this is we're going to come back to this and get into how this helps my weekly bias for next week, okay? So what happens? Boom, sweep of liquidity to the downside. So we just took out the buyers. So what's most likely going to happen next week? We had people stopped out who were longing on the weekly time frame, right? Weekly time frame, people had stop losses under here. Those people are out of the market. Then we also had retail traders buying within the market that just got stopped out. Where do we think market is going to go? Probably back up, right? Because they just got all these people, retail swing traders, to enter into sells right here. So what are they going to want to do? They're going to want to take these people out of the market. The institutions, banks, and hedge funds, their main goal is to take you out of the market. Notice how the people who are selling are wrong, and then the people who are buying are wrong too. Okay, so what is market going to want to do? It's going to want to put the people who sold once this liquidity was, once this low was broken on the weekly time frame, they are going to want to take those people out of the market again, right? So what are they going to do? They're probably going to want to push market up and put these people in heavy drawdown, all right? So what does that look like for us? We're probably looking for market to sweep liquidity on lower time frames. Okay, so what does that look like? Within here, there's a daily fair value gap. Okay, what I also see within here is a whole bunch of liquidity that has not been swept yet. Okay, we have liquidity resting above this high, this high, this high, this high, this high, this high. Or sorry, this high just got swept by this. But there's still liquidity here, 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 and here. And then we also have a huge fair value gap from CPI news above here. Okay, so we have highs here, here, and here that have not been swept yet. Okay, this is a tentative target for where I think market's going to go. I think we're having a bullish week this next week. I think we're sweeping these highs for sure, and then potentially even taking out these highs, pushing into this daily fair value gap, and then we'll make another move down to the downside. Okay, so that's how we can find our bias using high time frame liquidity, right? Okay, so now let's go into how we can find entries using low time frame, day-to-day, session-to-session liquidity. Okay, so let me just show you guys something. I'm going to place where New York Stock Exchange opens on the charts. Okay, so all of these red lines are where New York Stock Exchange opens. Okay, let's see what happens every New York Stock Exchange open. Where is the most recent and most prominent high prior to New York Stock Exchange Open? Right here. What happens? Sweep of liquidity, push down. Okay, let's move over. Where is the most recent and most prominent high prior to New York Stock Exchange Open? Right here. What happens? Sweep of liquidity, push down. Okay, right here. Where is the most recent and most prominent high, or we even can identify lows. Look, sorry. I always mark out the highs and the lows, the most recent and most prominent high and low of every session. Prior to New York Stock Exchange Open, okay? Okay, yeah, that was the only one I deleted. Okay. So, right, the most recent, most prominent high prior to New York Stock Exchange Open, right here. Where's the most recent and most prominent low prior to New York Stock Exchange Open? Either right here or right here, right? Either way, what happens? Sweep of liquidity, push up. Okay? Right here, we see the sweep of the high of the most recent, most prominent high before New York Stock Exchange Open. Okay? Same thing over here. What happens? New York Stock Exchange Open. Where's the most recent and most prominent high and low? Okay, the low is right here. High right here. What happens? Sweep of liquidity, push down. Okay, New York Stock Exchange Open. Where is the most recent and most prominent? Where is the most recent and most prominent high prior to New York Stock Exchange Open? And low, sorry. Low right here. High up here. Did we get a trade during this session? No, we didn't. No trades within here. Okay? So, moving on to the next day. And by the way, I did not trade within this day. And all these other trades, I caught and I won. Not to sound cocky, but I'm just saying. Okay? Next, New York Stock Exchange Open. Where's the most recent and most prominent high and low? Boom. High. Right here. Boom. Low. Right here. What happens? Low gets swept. Pushes up. That's still money made. Low swept. Pushes up. Okay? We also had this low, right? Previous. This was liquidity for this trading day, right? Right here and up here. Okay? So this liquidity just got swept. What's market probably going to do on open? Go up, right? Okay? Hope you guys are starting to get a feel for this. Okay? So that's how we can identify lower time frame, day to day, session to session liquidity. Okay? Now let's do this on a foreign exchange pair. Okay? Let's do GBP, JPY. There's no drawings on here. Perfect. Okay, I'm not going to go over daily liquidity. But, like, come on now. We can see. Liquidity swept. Push up. Anyways. Happens all the time. Every single day. Okay, we're going to go into the hour. And with foreign exchange pairs, something you guys need to know is, instead of just trading only New York Stock Exchange Open, a lot of traders actually will be trading London session or Asian session for these pairs. So I'm actually going to mark out every session on here, okay? So, London session, Asian session, New York session, all right, and I'm just going to do this for a little bit more. Okay. All right, and then maybe we'll go, where's 13? There we go. Okay, let's start right here. Okay, New York session opens. Where is the most recent and most prominent high prior to New York session open? right here. What does market do once New York session opens? Pushes up here, falls. Okay, not too much momentum during U.S. session. But notice this is a European and Asian pair. Okay, so are we going to get a lot of movement during New York session for this pair? Probably not, right? So we did push up here, but there's not a lot of volume, right? Because U.S. traders aren't trading this, right? But we do get that liquidity sweep and then a push down. Okay, next session, this is Asian session. Okay, where's the most recent and most prominent high and low from the previous session? High is right here, and then low, it didn't even form a low. I would just use this one right here from past. Okay, what happens? Sweep of liquidity, push down. There are trades that you can take within here that are giving you these trades, right? Okay, so within this session, this is Asian session, we didn't get even a move, right? Because this was the high, this was the low. So you were sitting on your hands during Asian session. Boom, London session comes, sweep of liquidity, push down. That's money made. I can show you where you can enter on the 1 minute if we go over here. Where are we? Right here? I believe this was it. Okay. This is how you can make money off of this. I do it on the 1 minute. People will hate me for it, whatever. Okay, what happens? Sweep of liquidity. Okay, that's our first induction. Remember, this is my strategy. I look for a sweep of liquidity, break of structure, fair value gap, enter off of it. Okay, so what do we get? Sweep of liquidity, first check mark. Okay, what happens next? Boom, this is the previous low made on the 1 minute. What do we get? Break of structure. Okay, what do we also have within here? Okay, let me turn this magnet off for a second. What do we also have within here? Fair value gap. Okay, what do? We enter off of this, short position, boom, stop loss above the sweep of liquidity, target previous areas of support and resistance or previous areas of liquidity. Liquidity lies right here, boom, take profit 1, smash. Take profit 2 down here, right? Previous areas of liquidity. Oh, look at that. Oh my gosh, it's almost like we just made more money. What are we going to do? Target again, take profit 3. Oh my goodness, would you look at that? Whole lot of money made, 1 to 3 risk to reward ratio. You guys know how to trade. It's that simple, you guys. Liquidity is so easy, and once you guys start seeing it on the charts, it's an infinite money glitch, okay? I'm telling you, and I'm trying to help you guys understand this because it is huge. It is insane when you realize where the banks and institutions want to push the market, how much money you can make, okay? So that was an example trade during London session, okay? Let's look at New York session now. Where is the most prominent? Ooh, okay, that messed us up a bit. All right, let's go back to where we were. Okay, right here is where New York session opens, okay? Remember, New York session, probably not a lot of volume for this European and Asian pair, right? It's mainly going to be London and Asian session that are moving the market. We do get a quick little move up, okay? Where is the most recent and most prominent high and low, okay? Most recent high, we'll honestly go right here for most recent low, okay? It doesn't have to be precise. We could honestly mark this out, but this is, you know, looking like it, right? Because this doesn't really look like much of a low, okay? Let's go on the 15-minute. Okay, sorry, 1 minute. Okay, what happens? What happens? We get a liquidity sweep. Do we get a break of structure though? No, we don't, right? Most recent low, higher low, continuation to the upside. No trade to be taken here, right? Just because we have a liquidity sweep to the upside, right? Maybe that's just a small move down. Doesn't always mean that's where market wants to go. Market wanted to push up. We never got a break of structure. No trade, okay? Simple as that. No money lost, okay? Let's keep going. All right, New York session is over. Let's go back, mark out our most recent prominent high. Okay. New York session's over, Asian session starts up. Where is our most recent and most prominent high? Right here. Where is our most recent and most prominent low? Right here. Can you guys see what happens? Can you guys see what happens? Yeah, you can. Okay, so boom, Asian session. Just like what happened last time, nothing happened in Asian session. Asian session, there's pretty low volume. Even though this is an Asian pair, still not that much volume, okay? So we don't get a sweep of our liquidity areas, so we can go ahead and leave them, and we can even add this as a potential sweep of liquidity too, right? But we have to keep this one in mind because it hasn't been swept from Asian session, right? So odds are London's going to want to target it. What did it do? Targeted it, okay? So let's go into the 1 minute, find us an entry. Okay, let's move over. Oh my goodness, you see this, right? Most recent and most prominent high. Let's go in here. What happens? Big push up, sweep of liquidity. Okay, within here, I wouldn't even consider this a break of structure, but once this low gets taken out, what is that? Break of structure. Okay, we can enter off the break of structure. Right, once this candle closes below, stop above liquidity sweep. Where are we targeting? Previous areas of liquidity within the 1 minute time frame. Okay, right here, right here, right here. We can just keep going down, you guys. Right here, right? And what does market do? Takes out almost all of these levels and keeps going all the way to take out this liquidity. Takes out previous session liquidity too. Look at that. Boom. Okay, and this is going to get into our very next trade. All right, guys, I'm telling you, this happens every time, and once you guys realize this, you won't be wanting to put no stupid indicator, no RSI, no Fibonacci, no freaking garbage on your chart, no moving average, no Mamba effect strategy. Yeah, that's right. Okay, we don't want that. Okay, what are we looking for once New York session opens? Remember, this isn't a U.S. pair, but we can still catch moves session to session. Okay, where was the most recent and most prominent low from over here, right, that we had marked off? This is still liquidity that can be swept. What happens? Boom. Sweeps liquidity. Okay, sorry. Let's say this is it, right? We swept liquidity during London session. New York session opens up. Okay. What do we see? Right? Sweep of liquidity. What's next? What's next that we look for? Break of structure. What happens? Boom, break of structure. You can either enter off the break of structure or you can enter within a fair value gap, right? There's a fair value gap right within here. What did market do? Push down into it. Okay, let's just say we're noobs. We're entering off the break of structure, right? Even worse risk-reward ratio. Stop loss underneath the liquidity sweep. What are we targeting? Previous areas of liquidity. First one, here. Second one, here. Next one, all the way up here. Okay, next one, all the way up here. Okay, what happens to our take profits? Hit, hit, hit. Did this one get hit yet? No, not yet. But still, you see what I'm saying? Okay, I'll show you one more example. Okay, 13. Oh, wait, sorry. Never mind. I can't show you another example. I thought we still had more sessions in us. We don't, okay? That is how you can find intraday, session-to-session liquidity to take a trade. Look for a liquidity sweep, look for a break of structure, and honestly, that's all you need, okay? I use the fair value gap just so I can hone in my entries to find even better entries, okay? So my risk and reward can be even higher. But see how we just marked out. How many sessions did we just mark out? 1, 2, 3, 4, 5, 6. And what? We had like 4 or 5 trades within that? And all of them were winners? Come on, guys. You can't think this is garbage. All right? So, hopefully you guys enjoyed that. Hopefully you guys sort of understood what I was saying with what liquidity is, how to find our bias on the daily time frame. I will say I wasn't too good at explaining that. I'm sorry if any of you guys were confused, but you're just looking for areas that banks and institutions will want to push the market to take retail traders out, right? You guys want to think, where will retail swing traders, right, because we're talking about high time frame, where will retail swing traders have their stop loss, and then where will retail swing traders also want to enter in the market in the other direction, right, on a break of structure when that high gets swept. So they're getting stopped out, they're also entering, boom, the perfect storm for banks to switch direction and nuke it or boom it, okay? And then within the 1 hour time frame from session to session, we see it happen too, right? Sweep of New York session, sweep of Asian session, sweep of London session, and so forth. Okay? Hope you guys enjoyed that video. That is liquidity sweeps. It's probably the most important thing within the market because it is what moves the market. Hope you guys enjoyed it. I also hope I fixed the audio for this video. And then I think I fixed the video quality as well. So hopefully you guys can see the wicks and the candlesticks a little bit better. But yeah, thank you guys for watching. I will catch you guys in the fair value gap video sometime later this week. I will try and get that out to you guys. All right, that is it for me today. Peace.